Q2 2025. From balance sheets to benchmarks. Joshua de Vos of CoinDesk Data breaks down the July digital assets report and touches on corporate treasury adoption, the digital assets dominating the headlines, and the role of benchmarks in capital decisions. You're reading Crypto Long and Short, our weekly newsletter featuring insights, news, and analysis for the professional investor. Sign up here to get it in your inbox every Wednesday. What looked like a rebound at first glance reflected something deeper, a change in the nature of demand. As digital assets rallied, institutional flows became more targeted, and corporate balance sheets emerged as a key driver of market structure. Bitcoin rose 29.8%, reaching a new all-time high in June, according to CoinDesk Data, but it was the nature of the buyers, not just the size of the move, that marked a turning point. With public companies increasing their BTC holdings by nearly 20% and expanding into assets like ETH, SOL, and XRP, corporate treasury adoption has entered a new phase, with the potential to reshape the asset landscape. Corporate treasuries take the lead. Bitcoin's performance in Q2 was not led by retail flows or leveraged positions. Instead, capital came from corporate treasuries. Public companies added nearly 850,000 BTC to their balance sheets by quarter end, marking a 19.6% increase. For the third consecutive quarter, corporates outpaced ETFs in net accumulation, reinforcing the shift in long-term holders. The message from listed firms was clear. Bitcoin is moving from speculation to allocation. Bitcoin is no longer the only asset benefiting from this trend. Public companies now hold over $1.4 billion in altcoins. ETH accounts for the majority, but firms are increasingly looking beyond the top two. Solana has seen corporate accumulation, while TRX, XRP, and even BNB are beginning to feature in strategic announcements. Nano Labs, for example, unveiled a $1 billion initiative to accumulate BNB. Meanwhile, Tridentity and Weebus.vip are planning substantial capital raises to support XRP buys. This level of activity, previously confined to BTC, is now spreading across the broader market. ETH reclaims market share. Aave tops index rankings. Ethereum, which had lagged in earlier quarters, reclaimed its footing with a 36.4% rise in Q2, CoinDesk Data shows. Flows into ETH ETFs turned positive, and have now remained so for 8 consecutive weeks. Adjusted for market cap, these flows are nearly on par with BTC, marking a convergence in sentiment. The 30% uplift in ETH/BTC hinted at a strategic rebalancing, with allocators rotating back into Ether. Beyond ETH, Aave delivered the strongest performance within the CoinDesk 20 index, gaining 72% in the quarter based on CoinDesk Data, as lending activity hit all-time highs and vPendle collateral was added to the protocol. Institutional relevance is beginning to take shape here too. The upcoming Aave v4 upgrade, along with the Horizon initiative aimed at tokenized real-world assets, positions the protocol for greater adoption beyond crypto-native circles. Solana keeps pace, but loses spotlight. Solana returned 24.3% in the quarter, according to CoinDesk Data, and retained its position as the leading chain by application-level revenue. However, it underperformed both Bitcoin and Ether. Despite solid fundamentals, investor flows were directed elsewhere. Capital concentrated in assets with more mature ETF infrastructure and longer-established treasury narratives. Even the launch of the REX Osprey Solana staking ETF, which attracted $12 million on its debut trading day, was not enough to reignite momentum. That said, investor interest is still building. The recent Pump.Fund token generation event is drawing attention from both ends of the spectrum. On one side are speculative participants, while on the other are value-driven investors assessing the project's revenue potential. Treasury activity also continues to rise, with over 1 million SOL now held by corporations such as SOL Strategies and DeFi Development Corp. Narrower gains, clearer signals. The second quarter confirmed what the first quarter had suggested. Leadership in digital assets is narrowing, and the market is rewarding clarity. The CoinDesk 20 index rose by 22.1%, although only 4 constituents outperformed it: Aave, Bitcoin Cash, Ether, and Bitcoin. The CoinDesk 80 declined by 0.78%, while the CME index ended the quarter up 27.8% despite a 109% spike in May, based on data from CoinDesk indices. Outside the majors, most assets lacked consistent inflows or structural support, leaving them prone to retracements. Bitcoin and Ether both saw their index weights decline by over 5 percentage points. This made space for assets that posted stronger returns, but it did not meaningfully change the composition of leadership. Aave and BCH still represent a small fraction of the index, reflecting the reality that outperformance alone is not enough to shift structural weightings. Liquidity and credibility remain prerequisites. Benchmarks as allocation tools. As adoption broadens and corporate behavior becomes more material to price action, benchmarks are playing a more active role in capital decisions. With more than $15 billion in cumulative trading volume since launch, the CoinDesk 20 is now both a measure of market direction and a foundation for building structured exposure. The rally in Q2 was real, but more importantly, it was orderly. Allocators are not trend chasers. They are building frameworks. Benchmarks, indices, and ETFs are at the center of this evolution. As digital assets move from the edges of portfolios to their core, tools that bring discipline and structure become increasingly important. For full performance details and constituent analysis, you can explore the Q2 Digital Assets Quarterly Report. Disclaimer: all price, index, and performance figures references are sourced from CoinDesk Data and CoinDesk indices unless stated otherwise. Joshua DeVos leads CoinDesk's research team, overseeing institutional-grade benchmarks and premium research publications. With nearly a decade of experience in digital assets, he previously headed Data's award-winning research division and served as head of research at a digital asset portfolio manager, where he developed foundational investment strategies, ATCC Data, now part of CoinDesk. Joshua created the industry's first institutional-grade ESG benchmark and authored numerous reports covering protocols, exchanges, stablecoins, and regulatory developments. He is a regular contributor to CoinDesk's Markets Daily podcast and has appeared on CNBC's Bitcoin Having Podcast, the U.S. presidential inauguration livestream, and in leading publications such as Bloomberg, Forbes, and the Financial Times.